Oh man, so Bitcoin opens up another green day. Futures markets are opening up green on the traditional markets. Is this now bull mode activated, or is this a trap being set up by the bears? In this video, we're going to break that down and a lot more. Remember, if you want to trade into these moves, Bybit, Mexi, links in the description. Those are affiliate links which support the channel. Guys, as you can see here, Bitcoin was initially falling down from this head and shoulders pattern. We had horrible price targets to the downside, but we recently had a little bit of a pump here over the last few days since this tentative deal around the debt ceiling has been agreed. The question now is all this euphoria we're seeing around content creators and other crypto analysts appropriate? Are we actually ready for a big move? We're going to break that down into detail. And I want to start off with this head and shoulders pattern because I've seen a lot of people talk about this head and shoulders pattern, but they're coming at it from a different angle. Now, if you watch certain channels, they're showing head and shoulders pattern across here with a horizontal neckline. And therefore, they're claiming that we're now back above the neckline. Right? Now, of course, in head and shoulders philosophy, if you're above the neckline, you've invalidated the pattern to the downside, which is great. My version, however, which I've had drawn from the start, is a diagonal. Now, I'm not saying any given one is right or wrong, but my one is set as a diagonal. And as you can see from this pattern, this is just showing us as a retest. And you can see yesterday when we had our red candle, it was no coincidence that we got rejected from that neckline. Now, given that scenario, that could say that the price target from this head and shoulders pattern of 24,000 could still be in play. Now, I'm going to share what I think makes me comfortable to invalidate this and what those key levels are. But there's one thing that is for sure. We have seen this move away from complete risk off, right? Because the debt ceiling did get agreed. That's a big step. Now there's a small risk that on Wednesday it doesn't pass the House because it has to get voted through the House. Now, that is a small risk. Again, majority of people expecting that to pass through, but we've got to account for that risk. Thereafter, there could be this thing that after Wednesday, when it gets passed, we could see a little bit of a pump. But then we could have an anticlimactic kind of sell the news event happen where we just see a dump thereafter. Because let's face it, this situation isn't good. They're just saying we're going to keep spending more and print more on the credit card. So we've got to see how that plays out as well. The other narrative we have to play on top of that is that the market is switching its focus this week to jobs figures. Wednesday, which is tomorrow, we get the jobs figure, the job opening. On Thursday, we get the ADP private payrolls. And then on Friday, we get the all-important non-farm payrolls. So this is an important jobs week. But on Wednesday, when we get the jolts on the same day, the House have to pass this debt ceiling. So we've got this going on. Now, the other thing which a lot of people are not accounting for, which is kind of getting me a little bit worried, which is not even coming up here on the main section, is the escalation we're starting to see between Russia and Ukraine. So I just wanted to point that out there, that if this starts to continue to escalate, it could throw a spanner in the works in terms of risk rotating back on. Nonetheless, we are seeing here in the pre-market, of course, yesterday was closed for Memorial Day. We are seeing the pre-market that people are feeling a little bit risk on, right? NASDAQ is moving 1.4%, which is primarily what Bitcoin is correlated to at the moment. S&P moving slightly 0.6% and the Dow Jones flat here on the day. So we've got to monitor this. And for me, I'm looking at this head and shoulders pattern. We've got to get above that neckline as far as I'm concerned. The other way to look at this is obviously from our cup and handle pattern. And if you remember from the handle, we're in this descending channel. Now, this descending channel looks fine, right? We bounced from the bottom of this descending channel, but what's the situation here? We're still in a descending channel. And so if we cannot start to beat important key levels here to the upside, which I'll come on to shortly, we could just be rotating back down here towards that 25,000 level. Okay, so we've got to break structure here. We've got to get above 29,000, 30,000 and then 31,000. We know those are the key levels for Bitcoin, and there's no way around it. We've got to get out of this channel and work our way upwards. Until we do so, if we just obey these lines, then we continue to be in bearish control, right? The bears continue to be in control of the trend. Now, of course, there's a reason that markets are starting to feel a little bit positive, and one of the primary reasons here is if we look on the weekly chart and bring out the EMA ribbon, you'll look at exactly where we bounced here when the EMA ribbon pops up, is right off that weekly EMA ribbon. And this is beautiful. When this ran up to 31,000, I said, wait for that pullback. And in this pullback, I DCA'd because I said this is a healthy pullback. And so far, so good, we've bounced. But this bounce is not complete until we break above this peak at 31. And I can't stress that enough. We have to get above 31, create a higher high, And then this game plan was perfect. Run to 31, wait for a pullback, nibble here at 25 range, and boom, off we go again, past 31, price discovery. And then we talk about the cup and handle pattern, which we were looking at. Then the price target takes you off this cup and handle pattern all the way up to 45,000, right? Things really start to get interesting when you look at that price target, right? But in order to do that, you've got to get past 31. And that's the important level right now, which we need to focus on, is breaking through the successive horizontal levels. Let me show you these horizontal levels. Let's pop off the EMA ribbon for a second. Let's bring back our horizontal levels. Let's drop it down to the hourly chart. And you'll see where we're sat. We're sat here at resistance around 27.7. Okay, so if we just zoom out here a little bit, let me put it into the 4 hourly, in fact. You can see here very clearly. We bounced from the orange line, 26.2. We worked past the apex of the triangle, fantastic. And where did we work our way up to? Where did we get rejected? Right at the top of the wedge, of the top of the triangle, right? So the triangle which we broke to the downside, we stopped and we rotated at the bottom of the triangle. Then we had a big move to the upside. Where did we get rejected? The top of the triangle. These are not coincidental levels. These are key levels. Now Bitcoin's coming back for some support around 27.8, but it's got to clear past this top of the triangle. It's got to clear past 23,800 roughly, and it's got to work its way through 29,000, then 30,000, and then 31. I know those numbers seem too round, but that's where those levels are. This triangle here, let me just draw these on for you guys. This point here, then 29, then 30, and then right at the top of the peak, 31. Those are the battles Bitcoin has to beat. And until it beats all of those, we don't have that higher high. And those risks continue to remain in the market. So yes, it's positive. Yes, we've made progress. That's good. But we've got to understand what is actually going on, right? PCE data was not amazing last week, right? It was slightly hotter than expected. The job figures are yet to remain. What are we going to hear from the jobs figures? Markets have decided to price in 25 basis points extra rate hike, which wasn't in the script just over a week or two ago. Now 64% of the market is pricing in that we're going to get another rate hike in June. So what is it that we're feeling positive about? We've got to understand. I think some of this positivity we're seeing in the market is just relief. I'd call it relief around the fact that this debt ceiling deal has been agreed, and it's possible that once it gets signed for on Wednesday, we could kind of see this sobering moment where everyone goes, it wasn't so great after all, was it? Now, what could change that is if we get a positive jobs figure. If on Wednesday, tomorrow, we get the jobs openings figure, the jobs figure, if that comes in line, good. Then on Friday, the non-farm payrolls, that's going to be the crutch. That's what the Fed uses to determine their rate hikes. We've got to pay attention to that figure with a keen interest. Guys, by the way, if you're looking to trade in these moves, Bybit, Mexi, definitely recommend those platforms. Links in the description if you want to trade alongside me. Also, make sure you're in our Telegram group. So many of you guys are not in this Telegram group and you're missing out on morning updates. We do updates on pre-market. We do updates, all sorts of updates here in this channel, including chart patterns and insights and alerts. So make sure you're involved over there. It doesn't cost you a penny. Join us over there as well. Okay. Also, if you guys would benefit from an alerts and signals, this is something that a lot of you have been asking me about. Let me know in the comments. Do you guys want to see like a private group where we do alerts and signals? Again, you're going to need your grown boy pants if we're going to do something like that. I want to create alerts or signals group where you guys are like, oh, look, some trades are going to lose money, some will make money. That's just how trading works. But if that's something you're interested in, let me know as well in our Discord or in the comments below, and we can look at getting something set up for you guys. But of course, it has to be with you guys taking responsibility of your own trades and only investing what you're willing to lose. Another very important narrative for you to watch this week is this US dollar index. Remember, this dollar index is above its EMA ribbon. It's nice and extended. We've got to bring it back down into its EMA ribbon, right? And of course, while we move into the EMA ribbon here, Bitcoin can benefit. Bitcoin moves inversely correlated, so it'll start moving to the upside. But the question is going to be, once it gets to the EMA ribbon, will the dollar index then bounce and create a higher high and continue its upward trend? Because if that's the case, then longer term, that's bad for Bitcoin. We don't want risk to rotate off. We don't want this moving in this direction. And remember, I shared with you on the weekly candlestick, it's flipped it back bullish again. So our only hope is to push this quickly back down to the downside again. And that can come if risk rotates back on again. And early signs in the pre-market is we are starting to see the Nasdaq move, but can we sustain this over the rest of the week? Will we get positive data coming in? Remember, there's Fed officials speaking as well. Can we keep the momentum going this week to push the dollar index to the downside, to keep the Nasdaq going to the upside, and to keep Bitcoin trending in the right direction to invalidate that head and shoulders pattern? It's this head and shoulders pattern, which I started the video off with, that we need to invalidate. We've got to work past the neckline, work past 29, work past 30, and 31. Those are the key levels right now in the charts. Guys, if you appreciate these quick updates with the technical levels to look out for on the Bitcoin chart, smash on likes. Don't forget to subscribe. Don't forget to go watch this Phantom video here because they just announced something huge, which is an absolute game changer for the blockchain. And I'll see you in the next one.